And joining me now to talk more about this market is Robert Teeter. He's a chief investment strategist at Silvercrest Asset Management. Robert, it's great to have you on the show.
Great to be here. Thanks for having me in.
Great day, especially as SNL celebrates its 50th anniversary behind us. As you look at the stock market, of course, for traders doing their jobs down there on the floor, how does it look to you at these levels?
Yeah, it's a little bit pricey here, but I think not terribly concerning. So about top 15% of valuations versus the last 30 years or so. We think that's sustainable based on a longer-term path towards lower interest rates. So one of the things that has our attention now is the chairman of the Fed speaking today and understanding a little better what might get them to move off the pause that they have instituted.
Now, we are going to hear from the Fed Chair Jerome Powell in just a little bit time, 10 a.m. Eastern. Of course, tariffs are in question. How do you expect the Fed Chair to navigate potential questions from lawmakers on tariffs?
Yeah, that's a very challenging dilemma that they have to deal with. And in the past, what they've referenced is that they will typically look through tariffs. They will see them as a one-time increase in prices, but they'll be willing to look through those. Of course, we saw in the notes from the last few meetings that they've already started to anticipate a little bit of upward pressure on inflation. So there is this trade-off between how much is unfolding today versus how much are they willing to look through. Powell's been pretty resolute in terms of his battle on inflation, so I don't think he will be too dovish here. I think he will take the tariffs into consideration and some of the one-time upward burst in inflation that might follow therefore.
What are you advising clients do in this environment?
Yeah, so one thing we've been cautioning is to be a little bit more patient than usual. It's a very rapidly moving environment. In fact, my last monthly letter, I wrote the letter, tore it up, had to write it to address DeepSeek, had to tear it up again as the tariffs came out, had to tear it up again as the tariffs were backed off for a month. So it's a very challenging time to invest. So our North Star has been earnings. One of the things that's been solid throughout this environment has been the economic backdrop, and that's led to solid earnings. And so we've said we recognize high valuations, there will be some volatility with news, but let's look through that a little bit and let earnings carry the day.
Now, is this a market where you would buy and hold, or do you think in a choppy nature like this, it is better to be trading?
Depends a little bit where the risk profile is. So if your risk profile is a bit elevated, important to be very nimble, very willing to adjust that based on the developments of the day. If you're right around target, it's an okay time to sit back a little bit and again let those earnings carry the day. We think it's a good backdrop for the earnings side, but it could be quite choppy in the near term.
I do want to get your take on inflation because we had seen in the consumer sentiment survey just last week on Friday, consumers actually expect inflation to rise a full percentage point to above 4%. Quite dramatic. Ahead of that consumer price index data tomorrow, do you think that sentiment is on point?
The sentiment is a little challenging on inflation, and it comes back to, the consumer tends to react to visible items in inflation. So whether that's things like gasoline or more recently eggs, it might be a small component of the index, but people see it every day, they see it on the news, and they react to that. So that's yet another reason that the Fed has to pay very close attention to inflation so that expectations don't become unanchored. And that's why I think Powell will continue with his very resolute policy of we need to get inflation back to 2%. It's not okay where it is right now.
Certainly 2% is the goal. Takeaways from the jobs report on Friday?
Yeah, the job market's been very solid, albeit slowing a bit. So the pace of gains has been slowing a little bit over time. Healthcare has been a really solid contributor to payrolls. We expect that to continue. There are a lot of jobs on offer there. That should continue. The government side could be a little bit choppy. Some of the changes taking place with DOGE and other things might show up later in the year. But we do think the employment market is stable. We think the consumer is strong. Hiring rate's been good. Wage gains have been good. But again, at a slower pace than they had been in prior years.
What should investors and our viewers make of dramatic changes coming from the government in D.C.?
Yeah, that's an important one to look through as well, because not only is the news rapidly evolving, but the interpretation of the news is unfolding as well. And there are some conflicts in terms of how policies are viewed. So tariffs is a great one. There's a lot of potential for, again, this one-time increase in inflation from tariffs. We think it's a bit more modest than most forecasters. But there are also some trade-offs there. If that changes how people are behaving in terms of domestic manufacturing, that could be good for smaller companies in the U.S. So there are a lot of trade-offs in these policies. They're unfolding quickly, and it's important to really think about both sides of the coin on each policy that comes forth.
Anything else on your radar, Robert?
Yeah, there are a lot of things on our radar. One of them has been a big theme of ours has been improving profit margins in the U.S. and is spread towards more companies. So, the whole AI wave kicked off with the chips, and then it moved towards companies that were, scaling and building models and things. We think the next phase is really to the users of this technology. So profit margins have been increasing a bit, mainly in larger caps. We think that will spread out to a larger segment of the market as companies get lower cost access to these tools and use them to increase productivity and improve profit margins. So we're excited about that part of the market for this year.
Robert Teeter, Chief Investment Strategist at Silvercrest Asset Management. Robert, great to get your take.
Great to see you. Thank you.
Thank you so much.